Traders, welcome back to another price action trading lesson, and in this video we're going to talk about multiple different price action structures. Today we were presented with a lot of different market structures, and our approach to each structure is a bit different. At first we can see that the structure of this market is a healthy trading range. How do I know it is a healthy trading range? Because there is no imbalance. The both extremes of the trading range are being reached consistently, and we have a lot of price swings just swinging up and down through the EMA consistently. Now, according to price action rules, most breakouts will fail, and we can see that the market broke to the upside and reversed instantly back below the exponential moving average. So now I need to identify the proper channel. Even though the main pattern is trading range, there are always channels even within the main pattern. There are smaller ones, but they are there. So my goal is to identify the channel. So I'm going to copy it, put it at the bottom, and I have a nicely fitting downtrend. And I have a break of a downtrend, which means according to trend line rule, this is the trend line, and there's a trend line rule of price action. I expect for prices to form new extreme. Now, sometimes it may not happen. For example, here we just get a break, attempt to create new high. That can happen here and there in trading ranges because it is also a failed breakout. And that's the bigger rule here, because most breakouts will fail. So there are more sellers than buyers attempting to create new extremes. So don't get too caught off guard if you don't see break a new high every single time when you're trading ranges. Sometimes in ranges, the extreme is so strong that you will pull back into the trading range. So as I have new low right here, because since the structure is down, I keep resetting at each new low. I'm counting for this low, and I have first entry short, pull back, second entry short, and notice uptrend has a break at a new extreme, which is indicating to me that this bullish correction played out, and I have to like a pullback. So this right here would be a high probability setup, because my goal is not to sell anywhere on a chart. It is to sell a high probability setup, which is a variation of a two-legged pullback under the right conditions at the key entry point. So it is at the key entry point, but notice the signal bar, very big. It's too low to these lows. You have stim at the bottom. Unfortunately, this could not have been entered. And also you can see it didn't even trigger right below this bar. There is a little bit bullish doji. It's stalled. So there's no way for us to enter, but it's a textbook to like a pullback while the market needs to get new extreme. And a new low was formed. And notice prices are correcting above EMA. So we expect after new low correction or possible reversal. I don't really want to take a higher low just yet because we didn't really touch the main bottom just yet. It is below EMA. It is still a little bit too risky. You would need a failed second entry short, which really never formed. You can see there is no tick lower below this bar triggering second entry short. So you just have a bullish rally, and suddenly at the middle of the trading range, you have such a massive bearish push down. So this is indicating something a little bit different. This is not starting to be a healthy trading range. If this was healthy trading range, you would be going back to the resistance. So after I see prices selling off strongly down like here, this is where I can measure something like first leg here, pullback, second leg here, and I have a larger two-legged pullback, which is market likes to move in pairs of two, as you can see. And we are right now breaking the main trading range. The measured move was reached. This downtrend now has a break new extreme. There's a second entry short for new extreme, but we cannot take it because it is so far away from EMA. You don't know if you're going to barely get out with the scalp. So this downtrend has a break new low, and you're pushing strongly above EMA. Now we know that most breakouts will fail. So this is the failed breakout. However, we don't really want to buy blindly just yet. Even though you have a break new low, you never know if you're going to make second leg to a new extreme, couple more pushes lower, or if it's just going to consolidate here a little bit. And notice you have a very strong push above EMA confirming the bullish momentum, and you have high-low confirmation setup that is confirming the failed breakout. Higher lows and lower highs are confirmation setups. And in this instance, this high low is confirming this failed breakout that this is valid, because it pushed strongly above EMA with such a strong bullish momentum. It took one tick lower, all the sellers got trapped, and a great tier 1 signal bar closing on its high, and market kept pushing higher. So this is the first high probability setup of the day. And once again, notice the same pattern as here, repeat pattern. This uptrend doesn't have a new extreme, which is quite unique. And as you can see, price is pushing lower. Here I have to ask myself, what's going on here? This is not acting as a trend range. Each new major high is lower than the previous one without even attempt to create new high. So that means if there is not even attempt for new high, there has to be some stronger key entry point. Normally you will get at least attempt to create new high, which is not happening. So at this point on, I identify why the downtrend something like this. Just gonna copy it, put it at the bottom. It fits nicely off of these lows, fits nicely off of these highs, and we can see the market is pushing lower. So right now, as I see market pushing below EMA here, confirming the channel as well, what is the pattern I would like to sell? A high probability setup, a failed second entry long, because right now we have moved from a healthy trend range into a bearish downtrend, because this confirmed it. It fits nicely off the lows. You can see each new major high is being lower, being strongly rejected. So I expect for prices to give me a failed second entry long, which never formed. It formed all the way down to here. Okay, we have a failed second entry long because I'm cutting for this high. First attempt to go long by the bulls, pull back, second attempt to go long. But it moves so far down. You're also very close to this support. You expect for prices pushing lower, yes. And then you have second entry short, which would have been decent. Notice how it formed doji here. Just nothing really that great. Unfortunately, no high probability opportunity for us to sell. Market created another small new low of this channel, and you have strong push above EMA. As I can see that there's some support building at this price level, buyers are considering this price level worthy buying. I'm just going to move my support a little bit lower to make it fit a little bit better, because we can see we're clear right now making even lower lows. Each new major swing low is lower than the previous one. And notice we have massive bullish push to the upside, and we have a correction. And now we have new high, first entry long, second entry long, and we have high low. Am I expecting to go long after this bullish push? I'm not, because our previous structure of a series of lower highs, lower lows, so we had a bearish downtrend. So this downtrend still needs to get at least a 10 for new extreme. Okay, we may not get full new extreme because overall this is a still large trend range. You can see support is forming here, but I am thinking bearish. So I'm going to reset the count here. I have a first entry long, strong push below EMA, which is good. That is confirming my analysis that this downtrend is about to reach new extreme, and I have second entry long failure. So this right here is a failed second entry long where the signal bar is not really great, but then you have a nice lower high confirming the failed second entry long. Lower high is a confirmation, up new high, first entry long, second entry long failure, and lower high. And this lower high is also first entry short, second entry short. So we have two variations of high probability setups in one, which is always good. Now, this is very nice setup to take, because this leg down needs to get new low. You expect new extreme. A lot of bulls must have gotten trapped here on this high low, confirming second entry long, because they're not paying attention to the downtrend. But the signal bar is a little bit big. You know what, I'm going to mark it, but it is definitely more aggressive, because also it is a little bit congested. You can see 1, 2, 3, 4 bars stacked even in the middle of these bars. If there was no stim right here, this bottom stim, you have more room, you're risking a little bit less, but you need to wait for trigger below this little stim at the bottom. That makes it a little bit sketchy, but it's important to study this setup, what's going on here. When you have first leg, 2 new low, pull back, second leg. I don't think you want to take this setup now, because there's a little gap between the EMA and the body. And you're also quite close to these lows. And this downtrend has a break new low. And now you can see EMA flattening a little bit. So it is really not that big of a strong momentum. This is not a strong downtrend. You really want to sell high, not really at the bottom near this support like this. A market created new low attempt according to rules and strongly reverse up. Okay, so as I was watching this, I identify my resistance here, because right now I can see move up, move down, move up, move down, move up. So I can see flat EMA, and it looks like we have small trend range at the bottom. So my bias here was definitely a little bit more bearish. At first, I drew my trend line tight like this. Okay, we have a break new high and we have new low, first entry short, second entry short. It worked for a scalp, but can I take it? Not really, because when I'm observing channels like this, I'm paying attention to how steep the channel is. Notice how steep this channel is. If I'm gonna sell, I want to see clear sideways. Of course, I'm exaggerating here, but I want to see clear 2 separate legs from one another to truly know that the wider channel is too big of a stretch. Here, once you see steep leg like this, that it basically looks like one move, you are not sure if the uptrend is just going to be a little bit wider like this, all right? And for this reason, I don't like shorting these steep legs just yet. And then look what happened. Because you have new high, first entry long, pull back, and you suddenly had second entry long. So at first, I was bearish bias when I was watching this. But notice what happened. You have a break, okay. You have a new low, and you have small 2 legs. First leg here, second leg here. So this is already telling you something, but notice what happened. Tick lower and instantly bullish reversal, and this bar engulfed all the prior bars, and this completely changed momentum. Once you see 2 legs down and downtrend playing out with the break new low and such a strong rejection off the EMA, this bar completely formed very quickly. This is the indication to you that you can now go long, because this confirmed that the channel is a little bit wider. All right, so you can switch the gears like that quickly because you have 2 legs down. And this is a second entry long, great signal bar. This uptrend expects new extreme. You don't have to be worried about this resistance too much because it's about the local price action, what's going on here. Clear 2-legged pullback, and the momentum of the EMA was very strong. There's no way you're going to get felt second entry long after such a big bull bar. The felt second entry long need to form below EMA. And the market kept pushing higher and it kept pushing higher. So I need to extend my channel because you keep pushing higher. So at this point, the target is probably this resistance. I'm just going to extend it like this. Okay, we can see we have a new high. We have only first entry long. There is small little support, but the signal bar is quite ugly. Then you have a break, 2 legs to a new extreme. Now, I don't want to sell just yet because I can see multiple rejections of the EMA. And when I was watching this live, I extended my channel, which I shouldn't have, because notice, you can make it extend just a little bit and still you with a confirmation right here. But the trend range is quite small and volume was so small that this is not a large trend range where trends are strong within. So it is better to follow the short-term channels with the break and 2 legs to a new extreme. Because as you can see, price is pushing back below EMA now. EMA not holding, something is changing. So I'm going to mark new extreme. So right now we had trend down, we expected break new low, and now we have a trend up, break new high. So what are we expecting? Most breakouts of trend ranges will fail, just like here, just like here. So it's the big trend range rule. We have a trend structure which has a break new extreme that played out. You have push below EMA and you have new high, first entry long, pull back, second entry long, failure. And this would be reversal pattern. Reversal pattern is characterized by 2 failed attempts in the previous trend's direction, which previous trend's direction was bullish. It needs to have a break and new extreme of the previous trend and needs to form below EMA. So this is a reversal pattern. It formed a little bit ugly because not that many bulls are going to go long. Who's going to go long above here, okay? And the first entry long was also a little bit sketchy. It looks like a part of one move down. It is a little bit ugly. I'm going to mark it mainly for static purposes. You know, it is such a nice tail at the top reversal and it's right below EMA. And at first, I believe I had my little bit. Did I refresh my chart? Yeah, I had my resistance slightly lower like this, so it nicely confirmed the resistance. So decent fill second entry long. The signal bar is worth risking a chance because there's a nice dim at the top and basically multiple key entry points. Market keeps pushing lower. I reset the count. Downtrend is in play and I have new low. First entry short, pull back, second entry short. Great signal bar, right at the exponential moving average. The downtrend needs to get new extreme and then market continue pushing lower. Now here I was wondering, because if I extend the channel like this, it fits pretty well. But you push strongly above EMA, I don't think you want to go long too early because you are in the middle of trend range. You don't know if you're going to make a couple pushes lower. But you can see EMA keeps holding. This is pretty much no trade zone. It's unclear. You're in the middle of the main trend range. You're above EMA, yes, but everything is looking so weak. Only after you keep pushing higher for more significant portion of the time, that's when I can see EMA rejections every single time. Right here, right here, right here, and right here. That's when I can adapt. Okay, I'm going to zoom back a little bit because after I see prices consistently being rejected by the EMA, we are starting to have somewhat of a bullish imbalance. And this is another structure that we're going to talk about because prior we had healthy trend range and bullish imbalance is indicated by consistent higher lows, but for the most part static highs. And we can see here that we have here basically very static highs, but each new major low is higher than the previous one, which is indicating bullish imbalance. If I'm going to plot midline like this, I can see that we have a bullish imbalance, which means prices eventually will break higher and there is a bullish bias overall. But here we have a little bit of a congestion, flat EMA, up and down, up and down, up and down, a little bit too stacked. Oops. I'm going to redraw the channel. At first I was playing tight channel like this with the break new high. You have 2 legs down, indicating that the bearish correction played out. 2 separate legs. Strong push above EMA. So what am I expecting? I'm expecting high-low confirmation setup of the second entry long because I have second entry long here. Here would be perfect to get 1 tick lower, high-low confirmation of the 2-legged pullback. Market likes to move in pairs of 2s. We get high-low here, but it forms so separate from this two-legged pullback, and it feels now like a first entry long, not really high low. That is part confirmation of the second entry long, so we can't really go long here and market continue pushing high. I can eventually extend the channel just a little bit like this. We have a decent new high, first entry long, second entry long right here, which you could have entered, but at this point on, it's getting a little bit too sideways, a little bit stacked. Now we have a break new high, so what do? Well, this is pretty hard to find a perfect setup because we're coming after a failed breakout, so we cannot really go long. It's too late. We're at the top of the main trading range. At the same time, given the bullish imbalance and how bullish bias we had, I can't really pick a top just yet. I want to see proven trend in opposite direction first before I'm gonna sell. It's okay to sell here because we've been having a clear trend range up and down, but now we didn't even make it to the bottom. We can't make it to the middle of the range, so picking top and selling is just too premature. We have a first entry long, second entry long failure, but it's too big. There's no room to these lows. You have a break new low, so you can see the bullish imbalance was too strong and you're selling at the low of this move. Had it been smaller, perhaps. Then you have a strong push above EMA and you have a failed second entry short, which that is very tempting, but you're closing on its high. You'd expect confirmation higher low, but higher low is horrible. Form even higher, far away from EMA with the body. Bearish body, not really great. You can see what can happen here. EMA flattening, and this is the time where you need to sit on your hands and be patient because we're coming after failed breakout, but the bias is too bullish. So just let the price action do its thing. It's very slow here. We're just going sideways. You're better off not picking up any entry. And we have massive push down. So if I'm going to measure this, like a first leg down, pull back, second leg down. We have an uptrend working higher, but we have a break and a new extreme. And this push down was very, very strong. So after I see that this uptrend has a break and new high, and EMA keeps holding, new low, first entry short, second entry short, a new high, first entry long, second entry long, this would have been a good high probability setup for a scalp to create new low of this downtrend, because this was such a strong spike, and once the micro uptrend has a break new high and EMA keeps holding, and you have two high probability setups in one, you know you're going to push lower, but it was a doji. I'm just going to mark it as a second entry short, fell second entry long. Had there been better signal bar, definitely would have been better. Prices form double bottom and strongly push above EMA. Okay, so at this point on, you need to zoom back and remind yourself the structure you're trading. Remember, we have bullish imbalance. And once again, larger two-legged pullback. Each new major low is higher. You have micro double bottom and strong push above EMA. So after you have this strong push above EMA right here, that's basically bullish imbalance kicking in again. And right now we're thinking bullish. You would be looking for a failed second entry short, but there is no trigger here. We only have first entry short failure, and now you don't get failed second entry short. You get it here, but it's below EMA. Not that clear. You can see prices pushing higher. You have a new high, first entry long, second entry long. High low here would be great, but it formed like this. Not that great. And now you can see that the prices keep trending above EMA. And given the bullish imbalance, I'm going to draw a wider channel because I expect for market to keep trending higher. I have new high, first entry long, pull back, second entry long. There's a downtrend with the break new low, and I have two clear separate legs. And notice how big this bullish bar is, completely negated all the prior bars, and notice how similar it looks to this pattern. You have two separate legs, break new low, and big bull bar completely engulfing the prior bars. So this is the identical setup of the EMA, of the trend line, two key entry points, great tier 1 signal bar. This is a textbook high probability setup. This is a no-brainer, and even if you wait here the entire day, you can get your nice, easy high probability setup. Two key entry points, bullish imbalance confirming the bullish bias, two legs down, great high probability setup. Now you have small little overshoot, downtrend that doesn't have new extreme. You have new high, first entry long, second entry long, but this downtrend just has a first leg down. It may get the second leg down. Like this. We're coming after overshoot, which can generate strong momentum in the opposite direction, and now you're again at the top of the range. So now you have to wait a little bit because there's a depletion now. Here you had room before this, now it's depleting. And you can see larger to like a pullback. The second leg was much larger, but strong push above EMA. Once again, notice this is how the bullish imbalance acts. It's very typical. You have strong push below, strong push above, and now this is another place where the bullish bias is kicking in, and all these patterns are the same. After you have a push above EMA, you're basically looking again for the high probability setups to go long. You can see the difference in structure. When you have a failed breakout here at the healthy trend range, you expect quick pullback into trend range. But once you have a bullish imbalance, each failed breakout is basically just a correction between the bullish imbalance kicking in again, and market keeps creating another series of high highs and high lows. So I hope you had a great trading day, and I'm going to talk to you guys next time. Take care, everybody.